Welcome back, traders. It's Chris Capri here with another Top Forex trade review. Ty's back. We had a lot of trades this week. This is the week of the market crashing. So I'm actually recording this on March 9th. We already have another video that's produced, edited. It's coming out tomorrow for our top trade review, but I'm recording this one ahead of time. We had a lot of contenders in our top Forex trade reviews from our students this week. Chris Toss, if you remember him from a couple weeks ago, he's back. He had some great trades. Ty has some, Byron has some, B3N. We have several members that are doing repeats, plus a lot of new ones as well. Mike 22. And so we got a lot of members who have just traded really well this week. I heard one trading guru mentor who's like super young and doesn't have a whole lot of experience in the markets, but they really think they're really experienced. And they were telling people, if you're trading right now, you're gambling, and that's it. And to me, that shows just kind of a level of inexperience. If you have a long-term stock portfolio or you have long-term trades in place where you just let it happen and just sit passively while it all just crashes in front of you, no, you could use options. There's ways to hedge positions, adjust your portfolio, rebalance. You can't just let things sit by. You can't just let this sit by, and you have to use this as an opportunity to profit, especially if you're trading FX. You know, the great thing about FX, unlike stock markets, which have an inherent bias that they want it to go up, most people profit if stocks go up, and most people lose money if stocks go down. FX, the great thing about it, we're not trading a single underlying instrument, we're trading one against the other. And so we can be up, we can be down, it doesn't really matter. It gives us a lot of flexibility to get short on certain currencies or get long on certain currencies that will benefit from these stock market crashes. So I don't think it's time to be sitting out. I think that's inexperience. And I think that's someone who doesn't understand the market. I think you should be attentive. I think you should be patient. I think you should be managing risk. But there's a lot of opportunities in the market. And this trade, this top Forex trade review by Ty, is going to demonstrate that. So this is a screenshot of that. He did this, posted this 4 or 5 hours ago. And so he's taking two trades on the Kiwi yen, which have benefited very well, as we talked about in our Is the Stock Market Going to Crash article that we had posted on March 1st. We talked about one of the beneficiaries of this is going to be the JPY currencies. And the JPY basket has been up tremendously since this whole crash has started, and it's continued to benefit. And he really profited from that, closing some massive, massive winners on this one. Over 1,100 pips each and over plus 111R on these trades. So if he risked $1, he's walking away with 111. If he risked $10, he's walking with 1,100. If he's risking $100, he's walking away with $11,000. He's just crushing it. It's just absolutely crushing it. So it's just truly amazing what he's done on this. And so Ataya has this unique style where he finds these trades where he risks very small amounts in terms of stop loss size, and he goes for very big targets, and he absolutely crushed on this one here. So he has two trades: short Kiwi yen, 73.45, stop loss 10 pips. Exit at 62.20 today for plus 1,125 pips. Holding time 2 months and 9 days. And he added on to the position 73.31, and that had a stop loss of 10 pips, and he grabbed over 1,100 pips on that one. So it's just an absolutely monster trade. This one he held for 2 months. So these are the trades right here, and we're going to show you another screenshot of it a little bit closer up. So you can see this is the trade from his brokerage account. This is his brokerage account. Shows when he posted the trades, post sell orders, prices are right. You can see it's all accurate. He had trailed his stop loss after a certain point, close it out at 62. Is that 62.25? 62.25. Take profit 62.25, and price was 62.20. So that is because the price was moving so rapidly. That was the next market price that the broker could get him out at. These are the two trades right here, and we are going to go ahead and look at this. I already have them up in my TradingView charts. So these are them, absolute monsters. Let's start with the daily. Let's zoom back a little bit. So here's his entry on one of the higher ones here. They're right about the same, so you can do it. In terms of his entry, to be honest, I don't know. I would have thought that maybe something like this, 73.20, he did get one of those in. And so I would have thought this would have been a decent entry. It basically lines up with this little top tick here and the major sell-off here. So he's thinking maybe a double top. I don't know, but in terms of where he got in, maybe what was happening is the market was going up and he got in after the market started to come back down. I don't know. His other trade was at 73, what was that, 45? 73.45 and 73.31. So that's where he's at, 73.45 and 73. So yeah, why did he pick this? It's a very good question. Let's see if there's anything else on the 4 hour. I understand the overall idea. He wants to get short there. All right, so the market peaks above this, and let me get actually into a 1 hour chart. This might be a little bit easier for me to look at. So here's that prior level, which is the prior spike high. Market spikes above it. comes back, bounces up, and he decides to short again, thinking that the market's going to reverse. I personally would have been a little bit skeptical. I would have liked the market to be below this prior high, which was the prior resistance back here. I'd want the market to be back below. If you're going to reshort, generally you want it to break back below a resistance, because that means that, if you think about it like this, if this held on this pullback and bounced up, you'd want these buyers cleared out of that. That would help from an order flow perspective, or you shoot higher up and maybe try and take a double top off this top here. Didn't quite get there. He shorted a little bit lower, and that's fine. Personally, I think the entry is a little bit on the aggressive side. I would like to get below this. The second time around, you have this prior history. You have this top and you have this top. So it's okay to be getting short above this here, because obviously this sold off, created a massive sell-off here. So you have resistance. Now resistance has gone up a level. So I would have been fine with that in the second trade. The first trade, I'm a little skeptical of it. I think it would have been just a little more prudent from an order flow perspective to let the market clear out that support before getting into that. But that's fine. He took the position, and he definitely was right on this one here. The market pretty much never went in the negative, and he had to hold this one for a while. He also had to hold this one while it came pretty much back to break even. That was after being up about 200 and roughly 20 pips. So he held it through this whole thing here, shows conviction. He trusts his instincts, and, he could have gotten out of here for that would have been a plus 20 trade, but he decided to hold on to it, and he added on to the position when it came back in. He felt like, hey, it didn't get as high. I want to short again. This should hold his resistance, and I should be in a good position. And he shorted this one. Right after he shorts, it comes right back to his entry, doesn't make the same high, makes a lower high, and then it sells off really aggressively. So after this kind of failed lower high, and then the impulsive sell-off, probably should have been feeling really confident about his position there, because the market tried to make it up to his prior highs, failed twice, 2 times in a row. And the second time he came to attack it, it sold off really aggressively. So it would have eliminated any bulls that had gotten long in this session. This kind of pushback here, which kind of lines up with here and here. So here's where we are. Just monster winners. Once it got back below this 20 MA, it just treated as 20 MA as resistance. We've talked about this before, that in trends, the 20 MA often acts as a really good dynamic support or resistance. I will leave a link in the description below we did a video about dynamic support and resistance that could help you use it to find trade setups and to manage trades as they progress. So really good job here of holding this. I think he could have managed this in the sense where he could have stacked onto his position. You have this nice double top here, which kind of matches up with this low here. And then boom, boom. Let's put a line here. So you can kind of see it right here. Low, lower high, gets below it, resistance, resistance. I think he could have stacked on a nice position here. I think that would have been great. Just above this line here. Added onto the position. It would have been nice. We definitely got short a couple times on this. We got short on one of these. We also talked about it. And we also got short a little bit lower on this one on the break. We took that break and profited heavily from that. We also talked about that trade idea on our YouTube channel about getting short on the break, and that has profited heavily. So why did he pick now 62.20? Let's put a little horizontal line here, almost on the mark. Why 62.20? Well, here's where he's at, and it looks like he had almost bottom ticked the market. His broker's a little bit different than mine. Yeah, how did he get 62.20? I mean, it does show in his broker. I guess his broker is a slightly different feed. What was our low? My broker was 62.52. His broker was a little bit lower than that. So, okay, good for him. I mean, not every broker is going to have the same pricing on that. That's 30 pips is a decent one, but it was incredible. That's a decent gap between brokerages. But if anybody was watching the price action this morning, there was kind of a lot of slippage in the pricing, and the market was kind of skipping, especially, I mean, even in the majors, but then you go to the minors and EM betas and stuff like that. Prices were skipping quite rapidly when the market had reopened after the halt. So quite a lot going on. In terms of 62.20, anything significant about this? I think it's okay. You got this bottom right over here. Let's go back to weekly real quick. I think you have to kind of look at this as a major zone of support. And I think you have to choose something inside here as your target. It could be anywhere from all the way up here, boom, boom. And then this is kind of the launch higher. We hadn't been this low in 8 years almost. So, once you started getting into this territory, the market's going to have a greater tendency to want to bounce even just a little bit. And so anywhere between, say, this zone here, you got all these spike lows here, you'd want to be taking profit. He took a little bit early on this one here. I don't know if he was doing it manually. It seems like he was trailing a stop, but I think he's basically just trying to get out before this zone starts to get thick and he runs into kind of a pushback on that. I think it was well chosen. overall, I mean, this is just a monster trade by Atai, and he is known in our community for making monster trades. That's his specialty, and he loves doing it with really tight stop losses. Maybe he loses a few, but then all of a sudden he catches a monster winner and just absolutely crushes it. So overall, I think it's great. I can't really say much about this one entry. I would have waited a little bit more on that one there to get below the resistance, but then the second time around, totally fine. I think his stop losses are super well placed. I think this first one is a little on the tight side. You know, here's the highest print, 73.53. So, you know, he's two pips above it. For him, he likes really tight stops. So I think that's workable. He's above the highest print here, which you'd have to do. I think that's fine. This one here, I think that's also fine. He's feeling like, hey, you know, we're not going to get as high. Maybe we're not even get as high as these right here. Personally, I would have liked to put the stop loss just as high as the other one here, but totally fine on this one here. The only thing I would do differently is to re-attack this trend. We talked about it here, treating the market and the 20 EMA as dynamic resistance, a clear RRL on this one here, support, act as resistance. So, you know, he could have on this day would have been perfectly fine to add on a short stack on your position. He's already well in the money at this point. He's got a lot of price action communicating that this is going to continue in his favor. Why not add on a position if you feel like you can? You're already in profit. If you want to, you can take one off the board. That's totally fine. Add on one. But really, there's no reason why you can't add on a position like this here, especially when it just holds at this level for so long. I mean, this is almost a good week and a half. So he had plenty of time to add on a position. That would be my only other suggestion. Maybe also adding on a position once it got below this here. But other than that, fantastic job to Atai in this one. Totally crushing. Congrats on this one here. So that's pretty much it. I might be recording some more videos because a lot of students have been posting just some absolute monster trades lately. I mean, the market has been volatile and we've been taking advantage of it, and we've been telling our members to take advantage of it. There's a lot of opportunities to make money. Don't get me wrong. You need to be cautious. You need to be smart. I probably will write maybe something in my YouTube community channel about some tips that you can deal with the volatility. But the whole idea that this one guy was saying, you know, like, oh, if you're trading during this time, you're gambling. Yeah, try and tell that to all the Wall Street traders and the prop firms and the hedge funds and S&P Capital and stuff like that. Try and tell them that. It's not going to fly. It's just someone who didn't have the experience to really understand the situation, because people have experience. They understand where the opportunities are. People who don't have the experience or understand the situation, they don't see the opportunities. So I get it. They were trying to be cautious and maybe help protect their students. I think that was a good idea, but you can still teach your students to be smart and protect their capital while attacking the opportunities in the market without throwing risk to the wind. So that's just experience that comes with time. I've seen it all. I've seen the 2001 dot-com bust. I've seen the 2008 great financial crisis, and I've seen this one now. And so, you know, I've been keeping my members apprised and how to play smart, how to trade safe, and how to profit from this, because there's a lot of opportunities. Not often that you get the market to move, you know, 400, 500, 600 pips in one single day. So I hope you enjoyed this video. Make sure to subscribe to our channel and give us a like on that there. Leave a comment below. We really appreciate it. It helps our YouTube channel out with the YouTube algorithm. The more comments, the more likes and subscribes we get, the more the YouTube fairies and algorithms like us helps boost our channel. We really appreciate that. So enjoy the video. I look forward to your comments and questions, and I'll see you in the next one.